Even though Bitcoin was the best performing asset of the past year and the last decade, today the tables have completely turned. Bitcoin is quickly falling, down 45% from its all-time high. People are seeing their entire accounts liquidated overnight. And even Michael Saylor, who owns 4% of all Bitcoin in existence, is now more than $6, $5 billion underwater. Today, we'll uncover the hidden forces behind Bitcoin's dramatic sell-off, revealing why this market move is far more significant than anything we've witnessed before. We'll explore what's truly happening, the bull and bear cases for its current value, how severe this sell-off could realistically become, why some believe it could even go to zero, and when, based on data, you should actually consider buying. The reason we are seeing a Bitcoin sell-off stems from 5 key catalysts. First, investors are turning risk off. As straightforward as it sounds, investors are shifting out of speculative assets and into safer havens as economic uncertainty grows. After all, stocks are trading at relatively high valuations. 3 out of 4 conditions are met for AI to be considered a bubble. And with interest rates expected to remain stable for the next few months, Bitcoin becomes a sell the news event, especially as people realize losses for tax harvesting purposes. Second, the US dollar is strengthening. Most people purchase Bitcoin as a hedge against inflation, a weakening dollar, and reduced purchasing power. But when the dollar starts gaining strength, there's less incentive to buy Bitcoin, leading to a sell-off. Third, ETF sales are amplifying the crash. When you buy an ETF, that ETF must acquire the underlying Bitcoin to hold as a reserve. While this benefits Bitcoin when prices are rising and ETFs are buying everything available, it also works in reverse. When people sell the ETF then has to sell its underlying Bitcoin, causing the price to fall, which in turn prompts more people to sell the ETF, further driving down the price and potentially creating a downward spiral. Fourth, there's a notable absence of new positive news. A year ago, there was the promise of a strategic Bitcoin reserve, optimism surrounding Bitcoin ETFs, and an assumption of endless money printing. Gold had yet to steal the spotlight, and Bitcoin was positioned as a dominating asset that would eventually soar to $250,000, $500,000, or even $1 million. Now, there's no more good news to anticipate. Most of the previous highlights have somewhat neutralized. Recent cryptocurrency legislation appears stalled, and there's a growing assumption that if we see another blue wave throughout Congress, they could move to further regulate Bitcoin in a way that suppresses its price. This leads to the 5th catalyst, a loss of conviction. Many investors no longer believe Bitcoin is a hedge against macro or geopolitical risks, especially given that gold rose 50% in the past year while Bitcoin fell 7%. Instead, Bitcoin has come to be seen as a leveraged risk asset, more closely associated with speculative stocks. Even Deutsche Bank suggested that the recent sell-off is more about negative retail interest than any single event. Simply put, people are losing faith that Bitcoin is correlated to anything, prompting them to sell, which causes the price to fall further, leading to more loss of interest, and thus more selling. Before we delve into whether this could be a generational buying opportunity that secures your financial future, or the biggest mistake you'll ever make, we must discuss Bitcoin's inherent risks. Let's begin with one of the most respected investors of all time, Warren Buffett. He famously stated that you cannot value Bitcoin because it's not a value-producing asset. If you buy something like Bitcoin or some cryptocurrency, you don't truly own anything that produces value. You're just hoping the next person pays more. This is why he has repeatedly referred to it as a gambling token, to the point where he wouldn't pay $25 for all the Bitcoin in the world. To further clarify, he explained that for assets to have value, they must deliver something to someone, and there's only one accepted currency. You can invent all sorts of things, like Berkshire coins, but ultimately, there's no reason the United States government would allow Berkshire money to replace theirs. While this seems like a rational explanation on the surface, his late partner Charlie Munger had much more forceful opinions. In the past, he called Bitcoin rat poison that would go to zero, describing it as crazy, stupid gambling, and stating that anyone who disagrees is an idiot. He even compared it to, and I quote, "Somebody else is trading turds, and you decide, I can't be left out." Despite such vehement opposition from some, others have slowly changed their tune. For example, Jamie Dimon of JP Morgan previously called Bitcoin worthless and a tool for criminals, though his firm now suggests it has better long-term appeal than gold. Billionaire Ray Dalio once labeled Bitcoin a bubble, but now refers to it as one hell of an invention. Even Larry Fink from BlackRock, years ago, said Bitcoin was an index of money laundering, but now admits it's a legitimate financial instrument with the potential to outperform the internet. This shift explains why several analysts have recently issued staggering price predictions for the coming decades. Cathie Wood has doubled down on her Bitcoin position. Michael Saylor still believes it will eventually hit $10 million, and Robert Kiyosaki has cash ready to buy more. However, I must be honest, this could also be the beginning of a much broader and more severe sell-off, lasting far longer than people anticipate. Stifel analysts are expecting it to fall to $38,000. Previous crashes have seen losses as high as 75% to 90%, and there's now a narrative suggesting we'll see $50,000 just around the corner. Now, regarding what history suggests is most likely to happen next, let's examine the Bitcoin cycle. It's important to remember that over the last 5 years, despite experiencing one of the fastest sell-offs in history, Bitcoin is still up 67%. Since February 2020, it's risen more than 500%, and by all metrics, its value remains significantly higher than what most people thought it would be worth a decade ago. However, it's crucial to acknowledge that Bitcoin is incredibly risky and volatile, to the extent that seeing almost all of your money wiped out in a few years is not at all unusual. For example, in 2018, it fell 83%. In 2021, it fell 50%. In 2022, it fell 74%. And that's just the tip of the iceberg. In 2011, it plummeted 99% after the Mt. Gox cryptocurrency exchange was hacked. In August 2012, it fell 56%. In April 2013, it dropped 83%. In March 2020, it fell 50%. Do you see the pattern? Throughout its history, it's been normal for Bitcoin to rally to unbelievable highs, leading everyone to believe they must buy immediately or miss out on getting rich. Then it sells off 80%. Everyone believes this crash is different. People lose a significant amount of money, and the narrative shifts from, I want to get rich, to I learned a lesson and I'm never doing that again. Of course, it's important for me to mention that just because Bitcoin has recovered in the past and then proceeded to reach all-time highs doesn't guarantee that it will continue to do so in the future. There is a chance that this time is actually different. But I remember making videos on Bitcoin when it was barely hitting $1,000. I was there when it crashed from a high of $17,000. I made a video when Bitcoin was $3,500, and literally nobody cared. It was one of my least viewed videos purely because there was no hype around it. I then made videos when Bitcoin was at $30,000 and $100,000. Every single time, people said, "Oh, this time is different." And then something would change, and the narrative would completely flip. The same can be said about the Bitcoin 4-year cycle. For the last 15 years, Bitcoin has gone through a rather predictable phase where people begin accumulating, the price starts growing, a bubble occurs with parabolic expansion, then the price crashes 80%, and the process begins anew. I also find it interesting that someone on 4chan appears to have correctly predicted Bitcoin's all-time high back in 2023. If this prediction remains accurate, we might see an all-time low around October 2026. So, in terms of my own plan, what you could do about this, and what history suggests is most likely going to happen next, here are my thoughts. To start, let's address some common misconceptions. I'm seeing many posts about Michael Saylor and MicroStrategy being underwater to the point of getting liquidated and collapsing the entire market. Let's set the record straight. Michael Saylor cannot get liquidated in the way many understand it. For those unaware, MicroStrategy currently owns about 5% of the entire Bitcoin supply, or around 735,000 Bitcoin. That's a lot. He could theoretically collapse the entire market instantly if he were forced to sell, but that's not how his funds operate. It's not like Bitcoin hits $60,000 and he's forced to sell everything to pay back investors. Instead, he operates by issuing what's called convertible debt, which functions more like a long-term loan. In this scenario, people lend Michael Saylor money, he buys Bitcoin with it, and those people can be paid back in a few years in either cash or MicroStrategy stock if the price is higher. The biggest risk here is that Bitcoin's price remains absurdly low for many years, forcing MicroStrategy to pay back investors by diluting current shareholders through issuing significantly more stock to raise cash. I suppose in an absolute worst-case scenario, he could theoretically sell off some Bitcoin, but that would be the nuclear option, and I just don't see that happening. Second, I also see many concerns about quantum computers rendering Bitcoin worthless. However, so far, these quantum computers don't exist in a practical sense. Bitcoin can always be upgraded to become quantum resistant, and while it could be a future concern if the network doesn't adapt, realistically, it's not something to be worried about right now. That's why, in terms of my own strategy going forward and what I am personally doing, here are my thoughts. Overall, my philosophy is this. I am entirely comfortable holding 5% to 10% of my portfolio in a Bitcoin ETF, knowing that I don't need the money, and that if the price falls 80%, it's a risk I'm willing to take. Yes, it would be disappointing to see the price drop so much, but I treat this as I would any other investment. I simply dollar cost average on a regular basis. I keep buying if the price goes up, and I keep buying if the price goes down. If it's worth more in the future, great. I've been doing this on and off since 2017, and I'm simply not bothered by the short-term price fluctuations. The way I see it, Bitcoin has not performed well when the overall market is falling or against fears of an economic slowdown, so I doubt it will serve as a safe haven like gold. However, I've also noticed that historically, when everyone has lost hope and believes it's over, it's usually not a bad time to buy. The only investors I have ever seen consistently make money are those who are not affected by short-term price, do not keep their Bitcoin on any exchange, and simply hold through it while regularly taking profits as needed. I know it sounds boring, but it's true. These investors are not going all in, they are not gambling, and they are not risking money they cannot afford to lose. They do not get emotional, they just buy consistently and hold. That's it. That's why I've personally adopted the approach of investing a small part of my portfolio in a Bitcoin ETF with the mindset that one day it could either be worth $1 million or a single dollar. Either way, I'm okay. To me, this is the best of both worlds because I get the upside if it appreciates in price, and I limit my downside if everything collapses since I'm not going all in. If I could offer one more piece of observation, it's this. Don't buy the hype and don't sell the fear. Anytime I get that feeling of, oh, I'm missing out. It's going up higher. It's usually a bad time to buy. Just like when I get the feeling that, oh, maybe I should sell because it's going to keep dropping in price and this is over. So far, that has usually been a good time to buy. I've also heard every "this time is different" argument for the last 10 years. Every time it is different. Every crash is different. And no two collapses are the same. They occur for entirely unique reasons. But so far, we consistently navigate through these cycles where there's doom and gloom everywhere. Bitcoin's price does nothing for years after falling 80%, and then out of nowhere, something happens. Obviously, that's not guaranteed, but you don't get rewarded for something without a lot of volatility. The truth is, your chance at making money is directly correlated to the likelihood that you lose money. That's really the trade-off you're making because it's almost impossible to value Bitcoin. It doesn't produce any cash flow, and there's no promise that the next cycle will resemble the current one. The long-term outcome of this is truly going to depend on adoption, regulation, technological relevance, and how it integrates into a broader financial system that is still evolving. That's why I think, at the end of the day, discipline matters more than conviction. Position size matters more than price targets, and consistency matters more than timing. If that works out, then patience gets rewarded. But if it doesn't, then you've limited the downside. I know that's not exciting, but that's how you stay in the game long enough for your investments to eventually have a chance to pan out. Thank you so much for watching. Please make sure to hit the like button, subscribe, and leave a comment below.